Okay, well, we have a supercharged panel here. Dan Morgan joins us, Senior Portfolio Manager at Synovus Trust, and Scott Kessler, Global Sector Lead for Technology, Media and Telecommunications at Third Bridge. Dan, thank you very much indeed for joining us.
Hi, Andrew.
And Scott, you too, of course. It's always a pleasure hearing from you. Can we start off with Microsoft? Dan, I'm going to call out some of the numbers to you, and then, because I know you're kind of at a disadvantage, you can't see all these numbers right now, but it looks like a huge beat on earnings at Microsoft, 294, and the consensus was only about maybe 263, or maybe a little bit more, but certainly beating pretty handily. So profitability at Microsoft doing just fine.
Yeah, Andrew, it looks like Microsoft had a beat across the board. You read out the three different groups in terms of their segments, productivity, and, in terms of intelligent cloud. Mm-hmm. It looks like they beat on that also. More personal computing, they beat. Productivity and tools, they beat. The big number coming into this, Andrew, which I know you're kind of sifting through, was trying to get a number of the Azer growth. Okay. I know in the last quarter they grew 30%. There were 6 percentage points were due to AI. So there's going to be a lot of ears, not just on obviously the big beat they did on revenue and EPS and on their three major operating segments, mm-hmm. but it's also going to be on the commentary that they give surrounding Azer growth. Was it enhanced like it was in the second quarter due to AI, which in the last quarter we had a 6 percentage point better because of AI. So I know they're going to be looking for that trend to continue in this third quarter.
I will roll, and Azer, of course, being their cloud computing business, broadly speaking.
Yeah.
Oh, okay. Scott,
and that's
sorry, Dan. Scott, you heard some of those numbers. Microsoft, the street seems pleased with what Microsoft delivered.
So, yeah, thanks a lot, Andy. If there's one number, and I think Dan alluded to this, if there's one number that investors key on, it seems like quarter after quarter, it's the top line growth for Azure.
Okay.
And the indication was 31% growth. I think that marks a continuing acceleration that we've seen, not necessarily in a dramatic way, but in a gradual way that really, I think, speaks to the continuing robustness and health of that business. And this could very well be a situation where the tail is wagging the dog, but nonetheless, it is something that people have been focusing on. And to see that growth rate north of 30%, I think is probably going to be seen as very encouraging to the investing public.
I mean, Microsoft must be in a sweet spot here, Dan. They've got all these business customers. It just seems logical that cloud services would work more smoothly with your Office products.
Yeah, Andrew, and if you look at where AI has made its biggest effect, it's been in the data center, it's been in the cloud, and we know that Microsoft with Azer has been in a great position. We were talking earlier about a growth rate north of 30%. Just to give you an idea, if you look at AWS, which is Amazon's product, they're probably going to grow around 12 to 13% year over year. We'll get that number a little bit later. If we look at, for example, GCP, which is the cloud product that's produced by Alphabet, we're probably looking around 25% growth. So you're looking at Azer with a huge run rate in terms of revenues, and you're also looking at growth that's ahead of the other players in that space. And again, a lot of that is most likely due to the fact that we've had tremendous growth in their AI space. So it looks like Azer is up 31% growth on this quarter. And as you were mentioning earlier, it is right ahead or a little bit better than anticipated. So I think the street's going to be very excited about that.
Yeah, Azer, as you said, 31% the revenue increase in the quarter. The street was looking for 21%. And Satya Nadella, the CEO, Scott, apparently he's been on a crusade. He's just pushing AI into every corner of the business.
Well, look, this is not all that dissimilar from when Satya Nadella became CEO a decade ago, and he reoriented the entire company around cloud and mobile. And that obviously proved not just prescient, but very successful. And I think he's probably trying to do something very similar as it pertains to AI. The other thing that I point out, Dan was referencing the comparison between the public cloud businesses, those being Azure as well as AWS. Google Cloud revenues increased over 28%, which I think also marked acceleration. Google Cloud includes some things other than Google Cloud Platform, but I think it's fair to say that Google Cloud Platform has been growing at a greater rate of Google Cloud. So what's interesting is you could see a situation where you're looking at over 30% growth for the number 2 and number 3 players in the public cloud category. That probably puts a little bit more of a brighter and even burning spotlight on Amazon and AWS specifically to deliver there.
Guys, it looks like it's a historic day because apparently Google has declared its first dividend. We finally got there. And apparently, let's check in on Alphabet/Google after hours. We did see the stock moving up something like 13% at one point, and a pretty big earnings beat from Alphabet as well. Yeah, that stock up 13% right now. First ever dividend and a $70 billion buyback. Sorry, I just want to check if it's in record territory. Yep. Good old Alphabet in record territory now. The previous high was about 162. Dan, from the little you've heard, does it sound like Google delivered as well in this quarter?
Yeah, Andrew, I mean, as you mentioned before, they had a top-line beat in revenue. They beat in earnings per share. I think that YouTube number that you read off was a slightly over $8 billion. I'm just trying to recall from
the
your
ad revenue,
announcement.
yes.
That was above, that was above expectations, which again is a very strong number coming out of them. YouTube had a little bit of slowdown in growth in subsequent quarters, but now it's reaccelerating. Also, Andrew, if we go back to the fourth quarter of 23, we have to remember that Alphabet missed on advertising revenues slightly. It was like, they grew 11%. The street was looking for 12, and they knocked the stock down. Where in this instance, it looks like we're seeing a reinvigoration in terms of YouTube ad revenues, which is very strong. And as we were talking about earlier, it looks like GCP beat, which shows, again, kind of a reacceleration from the growth rate that we saw in the fourth quarter, which was around 25%. So if we kind of go down all the matrix we're looking at, ad revenues, YouTube growth, GCP, and then you add a dividend on top of that, it looks like all good news for Alphabet on this quarter, which is kind of contradictory to what we saw last night, right, Andrew, with Meta. It wasn't as well received. Stock got knocked way down. So it's interesting to see the reception we're getting out of Alphabet because they both make money basically doing the same thing, selling ad revenues.
Yeah, what was that?
And digital ads.
Scott, what was that abbreviation you used? GCP? What was that?
Yeah, that's Google Cloud Platform. That's basically just.
Sorry, yeah.
Sorry about that.
Oh, no. What are your thoughts, Scott, on GCP, on Alphabet generally? Is it poised to ride the AI wave, or is AI, if Microsoft uses it effectively in its search business, an actual threat to Google?
So look, it's a little of both, but I think one of the things that we've consistently heard from experts that we speak to is the fact that on one hand, there definitely is headline risk to the cash cow for Alphabet/Google, and that is, of course, the Google search business. On the other hand, it doesn't seem like the AI kind of technological advancements and introductions into the marketplace have really had any material impact on Google's market share worldwide. And so the thought is that perhaps this is a risk, but it's not one that is a clear and present danger, let's say. And that's obviously been borne out by the results that we're looking at here, where you're talking about revenue growth of 15%, very encouraging. I'd also go back to something that we were talking about a bit earlier, which is the first ever dividend for the company. That obviously is kind of matching what Meta did not long ago, and declaring a dividend. I mean, this is a company that has over $100 billion in cash, and so clearly they feel financially kind of stable and healthy enough to make that kind of declaration. I think to a large extent, and this is something that we indicated, that people kind of reacted perhaps excessively to what Meta indicated yesterday. And don't get me wrong, there was some level of disappointment in terms of the guidance, but really it was because of the elevated expectations, not only around revenues, but around margins. And so I think that's really what people were focused on. Meanwhile, now you have both of these bellwethers, Alphabet as well as Microsoft, indicating strong kind of performance from a growth perspective, but also maintaining a level of discipline in terms of things like margins.
Yeah, that's interesting. Yeah, not just throwing money into growth. Scott, I think we have to take our leave of you. Thank you very much. It's always great getting your insight. That's Scott Kessler, a global sector lead for technology, media and telecom at Third Bridge. Though we can hang on to you, Dan, I think for a little bit longer. And thank you very much, because Dan Morgan, Senior Portfolio Manager at Synovus Trust. Dan, I'm just looking at the numbers here from Intel. And the headline is that they've come out with weak guidance on, I think it's weak profit guidance on their current quarter, their Q2 quarter. The stock is down around 6%. They came out with their Q1 numbers, but they see Q2 revenue as low as 12.5, consensus is 13.6, and they see their profit in Q2 pretty weak, only about 10 cents, and that would be less than half of what the consensus is. So Intel, it looks disappointing, certainly in the current 3 months.
Yeah, it's interesting, Andrew, because it's very similar what happened in the fourth quarter when they released numbers. They beat on their earnings and they beat on their revenues, but then their forecast going into this quarter was below what the street was looking for. And now we go into this close on this first quarter 24, they have a beat on top and bottom line, but then they guide for the second quarter below. And, you know, to be honest with you, Andrew, it's not that surprising. Think about the transition that really Intel is going through right now. They have a couple of new AI chips that we've talked about before. They have the Falcon Shores, they have the Gaudi 3 that they just released a couple weeks ago. There was some excitement surrounding that and their ability to compete against NVIDIA. And we're making that huge transition, right, to becoming one of the top foundries in the world to compete the likes against TSMC, Taiwan Semiconductor, Global Foundries. And they're expected to build these huge chip-making manufacturing facilities throughout North America, Canada, US, everywhere. And it costs a lot of money. And they've already come out and said that they are going to continue to post losses from that foundry unit into probably 2025, not even looking for that to break even till 2030. So I think what we're seeing, Andrew, is a mixture of a lot of different things really dragging down those Intel numbers, waiting for those new AI chips to come out so they can compete better against NVIDIA and AMD. And then, of course, this huge amount of money they're spending towards building out these foundries and the amount of losses that they're taking to achieve that. So I know we've talked about this before, Andrew, in the past. We talked about Intel's foundries. It's just a transition they're going through, and it's going to be a little bit painful to get to that end line.